Hello, my name's Justin Urquhart Stewart, and welcome back to those who've been with us before, and thank you for sparing the time. So, a few minutes for some views as to what's happening now in this fast-changing world during this pandemic. Well, let's have a view as to actually what's going on, I suppose, in terms of the structure of the economy, because this is going to be affecting America as well as, of course, we're seeing in Europe. One of the key elements here we're seeing is to what extent the governments get involved in investment in the country's companies and bonds. Now, we've seen already around the world in Japan, buying the government bond market to the extent that it basically isn't a bond market anymore. It's basically owned by the Japanese government. And you see the Japanese now actually buying into equities themselves. One of the largest purchaser of Japanese shares is the Japanese government. Now, in the sort of socialist world, that would be seen as sort of almost nationalization, which sounds appalling and dreadful. In the capitalist world, that would be seen as maybe building a portfolio of useful investments, or in the case of Japan, actually just making sure that those companies are still going to be there in some form or another. It's all adding to their form of quantitative easing. However, we've got a different issue now with the pandemic. With the pandemic, we're going to have to find more money going into the system, and therefore what do governments actually do? Do they just keep on furloughing out people to actually make sure they keep paying into getting their 60%, 80% of their salaries? And they can't carry on doing that forever. What we are seeing more of is actually companies putting their hands out saying, will you please help us? We are a strategic asset. That can mean all sorts of things. Will you actually support us and invest in us? Now, again, going back to old-fashioned socialist views, that will be forms of nationalization and government involvement in it. But maybe we should swallow our pride on this and say, why don't we look upon it as a sovereign wealth fund and actually say governments actually supporting companies for the longer term to make sure they're still going to be there in the next few years and providing a reasonable return for us. Now, that's actually going to be quite interesting to see how that goes. A good example here would be, certainly in the European case, some of the airlines, for example, slightly different in America. The airlines are going to be really very difficult indeed over the next few years. But on the other hand, you still need airlines. There'll be other strategic areas as well, which will be needing some form of support you can't do without. So it's going to be fascinating to see how that follows. Now, why is that important to us as investors? If governments are going to be supporting individual companies, they're effectively providing a form of informal guarantee. And therefore, if you're actually looking for secure investments, then you might well be following in on that one. So it'd be interesting. We saw this, for example, with the banks, where the banks were being supported by one way or another, sometimes directly, sometimes indirectly, and sometimes by Warren Buffett. Well, if Warren Buffett goes in, that's a reasonable enthusiasm to actually say, perhaps we could follow in, but we don't always get the chance to invest in Goldman Sachs ourselves. But you'll see that with other companies as well. So this is going to be an interesting phenomenon over the next few months. We're already seeing corporate bonds being purchased as part of quantitative easing in the States, and we're seeing that elsewhere. And we'll start seeing this form of corporate support as well, in terms of actually providing not just so much aid, but maybe investments in terms of support, maybe loans, maybe just buying shares altogether to provide that level of confidence behind it. That should be seen as an interesting issue for all of us. And I think that should be seen as encouraging. However, beware some of the darker sides of capitalism. Good capitalism will get us out of this. Bad capitalism will also be there as well. The unacceptable face of capitalism will be those companies that are still benefiting out of this, because companies getting furloughed, and we saw an example about this only a couple of days ago, paying out dividends to private equity firms because the private equity firm demands that they get their pound of flesh. Well, actually, in moments like this, I expect everybody to actually take the pain, including the private equity firms themselves, in terms of actually, if they're getting government support, we don't give government support to companies just to actually go and pay out the private equity firm. That is the unacceptable face of capitalism. We need that support to be going to the areas most dynamic in terms of investment and most dynamic in terms of the economy. And that's going to be the smaller companies, not the larger ones, who can take more of that pain. So look where the government support's going, and that's going to give an indication as where we could be going as well in terms of our investments. But be wary. Follow good capitalists, not the greedy ones. The acceptable face, not the unacceptable face. Good luck, stay healthy, and see you soon, I hope. Goodbye.